What's up, investors? Welcome to another episode of the W.T.F report, bringing you the latest and greatest news that directly impact our financial markets and, more importantly, our portfolios. So this week we had another unnecessary tech rally that led to the NASDAQ and the S&P 500 hitting record highs. We had a friendly warning and reminder from our favorite investing grandpa, Warren Buffett, and we also have some controversy with Apple and Fortnite. So without further ado, my name is Ayan with AQ Markets, and you're watching the W.T.F report. As always, here's the market summary. We had the Dow Jones relatively flat, just down around 0.1%. We had the S&P 500 up around 0.4%, still at that new record high. And we had the NASDAQ just fly this week, up 2%. Now, the reason that the NASDAQ and the S&P hit new record highs, and primarily the NASDAQ skyrocketed, was because of big tech. And the two companies that are directly responsible for NASDAQ being up 2% is Apple and Tesla. As you can see, Tesla's up around 20%. Apple's up around 7%. A lot of this has to do with, one, just the meme stock that Tesla is and how investors keep wanting to buy it and retail investors keep just memeing it up, as I like to say. They've recently just hit $2,000 a share, which is pretty ridiculous. And they're going to be doing that 5-for-1 stock split soon, which is going to give you 5 shares for every one Tesla share that you have. And we also had Apple doing relatively the same thing, except the people that were investing in Apple were more so defensive people that want to transition their money into a relatively safer investment, which creates the demand, which propels the stock price up. And along with that, they're also going to be doing their stock split, so more retail investors are looking forward to hopping onto that train. Speaking of Apple, they got into a pretty big quarrel with Epic Games, which is the owner and creator of Fortnite. For the people my age, we all remember Fortnite, we all remember getting our first dub, and we all also hate the fact that 12-year-olds are kicking our butt in it. And for the older crowd, you guys are probably upset that your 12-year-old constantly plays this game. Now, recently what happened is that in the in-app transactions that occur on the App Store, Apple takes a 30% cut of any transaction that happens for the app itself and for the in-app transactions. Epic Games recently put a promotion in their app saying if you use our payment system, you get 10% off. Basically, they bypassed the whole 30% thing. And this basically caused Apple from banning them and closing their app from the App Store, which caused a lot of controversy. Now, remember I mentioned that the antitrust probe involving Apple has to do with them taking 30% of the cut of every transaction that goes through the App Store and in the in-app purchases. So Congress more than likely is going to side with Epic Games on this if this were to go into some sort of federal court. And even better, this Epic Games probably saw the fact that they're getting attacked by this antitrust probe, that they decided to take that leap and just not care and go ahead and go with it because they knew they would have the Congress's support. So we're going to see what happens with that. If this does progress into congressional hearings and antitrust probes, that would be a bad sign for Apple. But as I've mentioned before, these big tech firms are really good at handling Congress. So that's why Apple is pretty much unfazed. As I mentioned, they're up 7% this week. Along with the record highs that we saw this week, we also saw two massive warnings. One coming from the Fed and one coming from our favorite investing grandpa, Warren Buffett. Let's talk about the Fed first. The Fed recently had their meeting and their minutes were released, and their basic message was, guys, calm down. We still haven't seen the full force of this impact, and we need to prepare for it and not get too excited. Basically issuing a warning. And in their minutes, their main two concerns in the short term and in the medium term was the inflation levels because of the added money that has been injected into the economy this year and the unemployment numbers. As I mentioned a few videos ago, we're right now at 10.2% as of the July numbers as far as unemployment goes. And one thing to note is that the government bailouts and the government grants that were given to massive corporations, primarily in the airline industry as well, they are going to be allowed to do mass layoffs soon, which is August 1st. The airline industry primarily is going to be the ones that people are going to have their eyes on, since August 1st is their deadline for if they aren't making money again, they're allowed to do layoffs. So the full force of unemployment hasn't really come out yet. And another thing is the unemployment numbers came out this week again, and an additional 1 million people filed for unemployment benefits, which is bad because we recently hit under the 1 million a week mark, where now we're above the 1 million a week mark, which is not really a good sign. So the future's unknown, and it's very important to be cautious and understand all the risks going forward, basically. Now, from our favorite investing grandpa, he basically has a very interesting indicator that he calls the bubble indicator. And what he does is he calculates the total market value of all the stocks in the US, and then he divides it by the United States GDP. Now, he says that a healthy level is around 1. We want a 1-to-1 ratio between this. That ratio right now is at 1.71. And just as a reference, the dot-com bubble of the 2000s was at 1.7. So we are above that. And what his indicator roughly tells us is that we are 71% overvalued in the stock market. What are you going to do about it? That's the main question, is no one really knows. Every single day we get new information about the stock market, and every single year and every single time period the stock market evolves. It doesn't operate the same way it did in 2000. It doesn't operate the same way it did in 1990 nor to 1980 or even before. So it's really important to realize that this isn't the doomsday indicator. However, it is important to know because you should process and digest this information and be aware of what could potentially happen, but then understand that not every situation is the same when it comes to the stock market. So take that information and tread carefully going into 2021. Moving on into some stock-specific news, we had Oracle jump into the bid to buy TikTok, which is pretty interesting considering they have really no social media presence at all. So this would be a very diversified bid for them to partake in, considering it would just completely add them into a new realm of an industry. And Congress actually supported this decision. It would not really be an issue as far as antitrust probes go, so we'll see if they end up taking it. Their stock kind of reacted initially on the news and then kind of leveled off. They had a good week, up over 2%, but you know, we're going to see if this is a real bid or if Microsoft is still going to end up taking it home. And now, following up from my previous discussion about Uber and Lyft and how they might have this whole problem registering drivers as employees, they actually were now granted a reprieve, meaning that they appealed the court case, so now they have like a temporary time period where they don't have to abide by that. And in that time, which essentially they bought the time, they're going to try to put on the ballot a law that can be passed by the people, whether they are going to vote to have them as real employees or vote to have them as contract workers. They are more than likely going to pour a lot of money into this because this benefits them if it goes in their favor. Their stocks did relatively well this week. They managed to recoup some of the losses they saw. However, this decision and this verdict going forward is going to be something that's going to be very, very important when it comes to the valuations of Lyft and Uber. Thus wraps up this week's summary. As always, if I miss anything, drop a comment below and let's talk about it. Or if anything interested you and you want to talk more, drop a comment too. Don't forget to like this video, don't forget to subscribe, and don't forget to tell all your friends and family. I'll see you guys next week. Thank you so much.